are you feeling comfortable with a 4 to 5 price sales ratio for Tesla right now, or do you think they should be more in that auto camp of like
No,
1x?
definitely not the auto camp. I mean, there are so many problems the current automakers have that comparing Tesla's valuation to them is just it's an effort in futility. I think like it doesn't make any sense to do that. There's no growth left for them. They have to make this increasingly difficult transition into the next era of transportation, which is going to be electric and autonomous. So for them to have to do that in the face of a company that's already essentially made that transition and has been doing that for a decade now, and basically we're now just starting to see the sort of legitimate efforts from the other automakers. It's not a good situation for them to be in, and they're strapped with all their legacy investment in factories and pensions, debt. Like there are a lot of financial headwinds for them, and we've been seeing them react to that by cutting dividends and things like that. Like Nissan's cut their dividend, Renault's cut their dividend, Daimler's cut their dividend. Like pretty much everyone, it seems to be, they're reducing that, and that's pretty much the only reason to own those stocks is for the dividend. So when that goes away, it's like, I'm not going to buy these stocks for growth. So
Yeah, and let's dive into that a little because you put out some excellent content on the financial situation of like I think Mercedes and some of these other companies, and as well as like BMW's like electrification timeline. So, what are your thoughts about when we were talking earlier off camera? You're like this, okay? I'm like, bro, have you seen how bad Ford and Mercedes are doing their financials? And you're like, yeah, that's with them doing everything in the short term to make these numbers look as good as they possibly can.
Right.
Like short term thinking for the financials and managing for that.
If you've ever worked for like a big company, you understand that there's a lot of gamesmanship to make things look as good as they possibly can, and that sort of echoes throughout the organization at each level. Like each person is trying to like make things look as good as possible to their boss. And then their boss is taking the aggregate of all of those things that their employees made look as good as possible. And then they're taking the bad stuff out of that and making that stuff look as good as possible to their manager, who's in turn doing the same thing every layer on up. And then you have management doing the same thing to investors, making everything look as good as possible. And they're strongly incentivized to do that when we get to the financial results because that's what shareholders are looking for. They're not looking for how you're going to be doing in 10 years. They're looking for like, all right, what's my dividend going to be this quarter?
Yeah.
What's your outlook this quarter? How are you guys positioned? And that short-term thinking is it's incredibly difficult to fight back against that when your business and your investor base is sort of built that way. Tesla's fortunate to have long-term investors because they've been not profitable for so long that their investor set has expected that. It's more difficult to make the switch from value to growth because your investor set is a value investor set and they want those dividends and they're trying to get those short-term returns. So it's just like a different group. To switch over is so hard. And you have to do it both for investors and for management.
Yeah, and it seems like a lot of these share prices, I think for oil companies as well, and just a lot of companies that like my grandma, shout out to Grammy, that she owns, like I'm like, your only thing that's propping up these companies, the financials are deteriorating, is this dividend. That's the only thing propping it up. The second they announce they're cutting their dividend, like the core value of the company is just about to get crushed. And so I think there's sort of like a lagging thing there. But additionally, I think another huge difference is not only in the way their investors are, but the management team. Like so many of these managers are just incentivized by salaries. Like Elon Musk is like the longest tenured US auto CEO, maybe of any auto CEO of a major automaker for like over a decade. And he literally takes all of his salary in stock, took this radical stock compensation plan. Like he is incentivized and really wants to make the stock price go up. And like all these other managers are probably making 10 or 15 million a year, just not caring about the actual future.
Right.
So I think that is,
the salary is a great point, and then even further than that, they're incentivized based on like their annual earnings numbers, which your earnings are going to be better if you're making fewer investments into the future. That's just a natural outcome. And there are some things like return on invested capital that they try to integrate to alleviate some of that, and they'll have these like long-term compensation plans which end up only being like 3 years, which is not a long enough time horizon to make some of these investments and actually start getting a return on them in some cases. Like think about the supercharger network. That's a great example. Like another automaker is not going to do that because that would hurt the ability of those managers to be able to, and we're talking like C-suite people here, that would hurt their ability to earn their performance packages. So they're never going to invest in something like that because there's not a capital return on that. Where you see that come through is your customers are going to buy more vehicles. But if you're not even profitable on electric vehicles, like that doesn't do anything for you in that time horizon. And a lot of these people are thinking, 5 years maximum, because that's like the span that they have left in terms of their career probably. So why would they care about 10 years from now if it's not going to help me earn more money today?
Yep. Incentives are misaligned.
Absolutely.